Hi, everyone. Very exciting session planned for today. We have some of the leading industry experts from a knowledge perspective available to discuss some very interesting topics. So I appreciate all of your time, your willingness to participate on the panel. Let's go ahead and jump right in.
And I think the interesting thing too, in looking at all the activity in the alternatives fuel world, is looking at where kind of the general point of taxation is between kind of your historical petroleum products, gas, diesel, and jet. You know, we're all familiar with that in this room, right? It's at the rack, maybe at a license level, but it's not at the retail level generally. I mean, that is, in fact, over the last 20 years, we've moved far away from the retail level, you know, up to the refinery level. I think Rich will even say maybe feds are looking at the refinery level at one point or another. You know, we're at the rack today as the highest level. But, you know, in general, alternative fuels are taxed at the retail level. Are you putting this alternative fuel into a vehicle? That's the point where that taxation attaches. I mean, there's exceptions to that, but that's generally where it is. And, you know, to Leonard's point is give us a decal once a year and put it on there. That's how they're tracking it. You have the truck that uses CNG, you pay for the tax basically up front. So as states move towards or recognize that alternative fuels in whatever form they come in are going to play in the market, you know, which direction are they going to go? Are they going to basically enhance the retail base or retail level tax that they already have in place? Or are they going to try to basically pull those alternative fuels into, you know, kind of the classic gas, diesel, and jet tax structures that we're familiar with? And I think that's going to be the real rub as we look forward to that.
And you're going to have some you'll have to look at, because natural gas will have a potential for sales tax on it along the way. So you've got the potential of natural gas sales tax on one end and a motor fuel tax on the same stream. And some states are already ahead of this. Some states actually issue exemption certificates or have exemptions if you are compressing that gas and if it's going to become taxable as a motor fuel, they will relieve you of the sales tax and gross receipts tax on that natural gas stream. But not all the states have that in place right now. So.
Yeah, from a federal standpoint, the government has assessed the tax similar to a lot of the states. Is basically when it's placed into the fuel supply tank of that motor vehicle. So consequently, that is basically at a retailer or at a user level. And you end up with so many taxpayers, the compliance issue just becomes much, much too difficult. And as the usage of these alternative fuel vehicles becomes more and more, the compliance issue will be far greater. And that's why the federal government was looking at alternative forms of taxation to the cents per gallon or cents of gasoline equivalent. Well, also difficulty is that with Congress being unable to extend a lot of these things farther out than a year or two, it makes it very, very difficult for businesses to make plans. For example, just with the biodiesel and the alternative fuel credits, twice within the last couple of years, Congress has failed to extend those credits. And granted, they did make those credits retroactive once they did get around to it, but still, even for this year, the credits on the biodiesel and the alternative fuels are due to expire at the end of this year. So, become the end of this year, they're going to have to go through the same argument again about, do we extend it, or are we just going to let them lapse again for another year? And it's very difficult for a business to make plans about purchasing equipment and putting in the compressors to fuel your vehicle.